Welcome to Market Day Report. I'm Chris Swift. We've had the Wasde report out, and we've seen the markets trade, and it unfortunately doesn't look very exciting. But let's take a look and see what the corn board's doing now. Pretty sure it's still just a little bit firmer, up 1 3/4 on the March, 436 even. On the May contract, up 1.5 at 448. All those setting new lows in this decline, if I'm not bad and mistaken. July up 1 1/4 at 456 3/4, and that December right up on the high of the day, 474.5, up 3/4 on the day. Take a look at the soybean market. It had been all over the place today, and now kind of mixed with the March up 1.5, 1190.5. May down 1/4 at 1197 1/4, and July 1207 unchanged on the day. Take a real quick peek at the November contract, see if it did anything any different. Novi beans up 1.5, 1172 1/4. In our Chicago wheat market, it's been a little bit lower and still is, down 11 on the March, 591 even. The May down 11, 597 even. New crop July, $6 1/4, down 10 1/4. Kansas City hard red winter wheat down 13.5 on the March at 604 3/4. At the May contract, 602.5, down 13 1/4, and not to be outdone, July down 14 at 595.5. We'll wrap it up with Minneapolis spring wheat. Down 12 3/4 on the March at 683.5. The May contract, 683 3/4, darn near the same price, down 12. And the July contract down 10 3/4, 689 3/4. I'd like to invite my guest in, Tommy Grisafi. He is with Advanced Trading. And Tommy, it's amazing what technology can do. I know you're right upstairs from me there.
Yes, I am. Yes, I am. Interesting number. We just had it come out. We digested that. You know, the sad news, my friend, is that beans were up 12 or 13. I think that was giving people a little optimism. The good news is that the overall, as I look, the corn ending stocks didn't get bigger in the world, and the wheat ending stocks shrunk a little bit. Lower prices create some demand. It's interesting. The bad news is the bean crop we're starting to find beans all over the world. Even looking at some of the Canadian numbers, we didn't find more beans, but we found more canola. And, that's something that can be squished and made in oil. So with that, I'm kind of laughing. I'm here filming with you. I'm looking up, and I'm on a 10-second delay up there watching me watch me. So that's funny. But I will come downstairs, and you could watch me film. First of all, I also want to thank you. You brought me another jar of jam, and this little bear loves that jam that you've been bringing. I haven't watched. I got the show on. I've been watching you all day. I haven't heard what you said. But what are other analysts saying? Are we all coming on and saying the same thing? Yeah, there's a lot of corn. I mean, how can we put a different spin on this, Chris?
Well, it would be nice to be able to find some way, but most analysts are pretty much have said all the same things because there's not a great deal of difference. It's our demand situation. And when we talk about demand, we talk about money, the money to be able to buy those things, whether it's our own domestic demand or somewhere out there in the country, in the world. Our dollar continues to strengthen. That kind of hurts our exports on there. But we're not seeing a whole lot more from any kind of aspect that's going to increase employment any greater than what it already is right now. We saw a whopping number last Friday, really surprised everybody, and yet we're still seeing increased household debt and increased consumer debt. So a lot of these things don't make some sense to me, but what I know is we kind of need a consortium to get everything moving in the same direction again. And right now I'm watching energy prices be quite a bit higher, and that led to the bean oil being a little bit higher today. So maybe we see the energy markets kind of giving a foretelling sign here.
Yeah, that's interesting because right before I went on air, I looked at my phone and a couple things that popped out. Crude oil up $2, and then what's going on in the cattle market. We'll talk about that next segment. Give people a little tidbit about what we're going to talk about on Cow Guy Close today. We're going to talk about, corn's at a 3-year low, but why aren't prices of hamburgers and everything else going down? And people who watch the show, who see the price of corns, that's just a small part of what goes into inflation. This inflation trade may be picking back up, to your point, with the oil, the shipping, and everything else going on around the world.
Absolutely. Tommy, stick with me. We're going to go away and take a real quick commercial break. We're talking to Tommy Grisafi. Stay with us. Welcome back. We've seen the cattle market moving all over the place, and it's still holding some of those gains as we're coming in here to the noon hour. So let's take a look and see where we are. Still up $1.45 on the Feb contract at 183.67. That's almost $1 off the low there. The April contract up $1.50, 186.30. The June contract up 130 at 183.50. See what our feeder cattle market was doing. It still had some stellar gains on there and holding them pretty good. I got the March at 247.42, up 187. The April contract up 127 at 252.47. May's up $1 at 256.90. Take a look at our lean hog market here. Down 15 on the Feb contract, 73.22. The April down 97 at 80.12. That's going to be spot month next week. And the June contract down 90 at 94.67. It's picked up a little bit off the low of the day. I'm going to ask Tommy Grisafi to come back in for just a second. Talk livestock's on there. We were off air there and talking about the cattlemen liking this rally, and I have to believe that they do. It was very unexpected all the way up until we got that snowstorm. There wasn't a very good outlook for cattle, and now seemingly in 3 weeks they have turned the world around.
So let's take that news and information and give the grain farmer the same hope that when things look dim and that we can never rally, not only can we rally, we could rally a lot. I don't think that'll necessarily happen in grains, but things can change. And one thing I know, imagine if after cattle broke, you sold some options, like if you just naked sold some calls. You know, those folks are actually having margin calls now. So the very people who said, oh, if cattle could ever rally, I'll do something, we're at those levels, correct?
Absolutely. And, you know, what's interesting is margin requirements. Everybody really dislikes margin requirements and having to meet those margin calls, but we kind of look at it from a little different way. If you weren't meeting margin calls out there, the market's not going in your direction. And in all honesty, they very rarely ever hedge 100%. So we want those markets to go up, and if nothing else, giving them an opportunity to be able to get some of those prices that are out to the future.
I love what you said. Think of this. Think of all the corn farmers who aren't making margin calls right now, but the money's just literally evaporating out of their checkbook. I've said it on this show, and I'll say it again. We can make a YouTube short out of it. You're going to write the check whether you write it or not. You could write the check for protection, hedging, or you could write the check when the market evaporates like it did. The American farmer just wrote a multi-billion-dollar check for corn, wheat, and beans, and the check is still in their book.
Absolutely. Tommy, I can't wait to hear you when you come back on the Cow Guy there. So stick around with us. Look forward to seeing you in just a few minutes. And Suzanne, that's
great stuff.
The next
Thanks
segment
for breaking
there.
it down. Absolutely. Of course, Tommy Grisafi, as you mentioned, is going to be up for Cow Guy Close.
He is great. I finally got to meet him in person and spend a little time with him. Super, super guy.
Yeah,
so.
both of you. Thank you so much, Chris.